So welcome back, everyone. Welcome back to my YouTube channel. I know it's been a while since you last ate for me, and I've actually I've been busy. Yeah, I've been busy facing my demons, facing my demons, and about my ups, about my down, about wonderful moments, about moments I'm down, then about profitable moments, making a couple of dollars, not thousands of dollars, actually, maybe in the tens and in the hundred. Yeah, and I've had my losses, and it's been good. It's been good. It's been good. It's been good. Actually, it's been good. Right now, I'm just speaking. I'm not recording my face. I just want to have a discussion with you all. I don't know whether I'm going to share this video. I don't know, but I want to record. I want to record. I want to record. Yeah, I want to get back to recording. I've not been consistent with recording in time past. I don't know if I'll be consistent now because I obviously have a lot going on, but I want to still record this particular video and put it out there. So basically, in hopes that it's going to help someone get better, help someone think better when it comes to trading, or help someone trade better. Yeah, I believe it should help someone trade better. Yep. So yeah, let's get to the point. Let's get to the point of making the video. So I'm not going to be sharing my actual analysis and all. Rather, I'm going to share, let's say GBP USD for example. So basically, I just want to share with us some trading bias, right? So what do I mean by trading bias? I just want to share with us like a way of thinking when it comes to trading. You see, it's quite different, right? A way of thinking when it comes to trading. I want to share some things with us. Let me delete all of these ones. I don't need it. Okay, so that's by the way. Now, what I want to share with us today is something that has been guiding my trading for the past 1 month, 2 months. I think for the past throughout this year actually. Yeah, I think my thoughts as per trading has been changing. My thought as per trading has been changing. Yeah, it has been changing. How I view trading has been changing. Basically, my approach towards trading has been changing, and every other thing has been changing by me in how I view the forex market, how I view trading tools generally, or yeah, trading pairs generally. Now, um, I'm sure we all are familiar with the topic of forex, right? We all are familiar with the topic of forex, and okay, we all are familiar with the topic of forex. And when I say familiar, I mean like absolutely familiar with the topic. But one thing that I think we all have always been doing is looking for one strategy or the other. Yeah, looking for one strategy or the other, looking for one way to trade or the other, going from this strategy to the other. Why not taking note of what's actually happening in the market itself? And what's happening in the market itself is just basically a number of people buying and selling, and that's just it. So it's just a display of what buyers and what sellers, and the price that they are buying out or they are selling at, or the price they are most comfortable at buying at or at selling out. So one thing that should come to your mind is when you have two things, when you are taking sides between two things, then we should have what is called what balance. We should have what is called what balance, right? So your understanding of um where balance exists or the need for balance should be in my own from the point I've come now is what I think should be the basis of how you trade, right? So the question is, who is tilting the balance, or who is upscaling the balance? Do you get me? So if there's any point in time where the buyers and the sellers balance out each other, that's when you have what we call the week. Are you with me? If they balance out each other, meaning that say the sellers try to take the price down, the buyers come and they push the price up, that's what forms a week, right? But if one side is in control of the market, if one side is in control of the market, one side is in control of the market, just coming into the market and giving us a candle, right? Giving us a full body candle, whether with a small wick or with a long, but we have like that body of the candle. That's what one side in control. That's like dominance. Are you with me? So it means that the balance what is more tilted towards more side. That's whether the buying side or the selling side than what than the other. More tilted towards the buying side or the selling side than the other. That's basically what the market is doing, right? Now, um as you go about trading, as you learn about terminologies and every other thing, I'm sure we are going to come to the FVG. You get to learn about the FVG. That's the fair value gap, right? So let's even do a quick thing. Let's do a quick thing. Let's say we just come to your Google and you just come over and you just type what is FVG, right? I want to point out something for you. What is FVG? So let's use the AI. So is what a price imbalance on the trading chart, right? Is what price imbalance on what on the trading chart. And when they say imbalance, it means that what one side of the market is in what is in control. One side of the market is what is in control relative to what to other participants, relative to the other participant. One side of the market is in what is in control, right? So basically, dominance is characterized by formation of what averages. Dominance is characterized by what formation of what FVG. Do you get me? Dominance is characterized by what formation of FVG, right? So I'm laying something to you. The first thing you should understand is we have a balance, we have dominance, and you want to be trading dominance. You want to be trading and be expecting dominance. That's it. So when you are trading and you are seeing dominance, you are seeing FVGs, that would give you more confidence, right? That would give you what? More confidence and lots more. That will give you confidence, basically. That would give you confidence, right? Now, the next thing about trading now, after you understand, oh, Forex is just pair of people buying and selling, right? And then if we have two people taking one side of the scale and the other side of the scale, we will have what balance or what imbalance. And when we have imbalance, we form what is called what FVGs. That's the fair value gap, as they would call it, right? But understanding what the FVGs means is what matters the most. Understanding what the FVG means is what matters the most. So at every point in time, buyers and sellers are both defending their positions. Buyers and sellers are both defending their positions, right? They are both holding tight to their positions, or they are both letting go of their position, either in profit or in losses, basically, right? Basically, either in profit or what or in losses, right? So with this understanding, you come into the market as a neutral person trying to execute trades either in the buy direction or in the sell direction, and you are coming in with numerous strategies, the trend line which I've used before and which I might even still use in the future, the support and resistance line which I've used before, which I might still use in the future, right? But market is meant to be, is not meant to be, is not meant to be, it's not meant to be like um like a hardcover, right? It's not meant to be a hardcover. Just with basic understanding, you can still be profitable, right? Basic understanding, like I'm saying, they'll sound basic, but it's just a way for you to just interpret candles. That's what I'm trying to tell you, right? Just a way for you to what interpret candles, right? Now, let's go on before I make analogies or any other thing. Let's go on and take another point from what they call from trending markets and whatnot. So in a trending market, either formation of higher highs and higher low, right? We have this, that's an uptrend, as we already know, or formation of what lower low and what lower high, as what as we already know. That's basically a trending market. That's everybody's familiar with that. Everybody's familiar with that, right? Everybody's familiar with that. That's okay. Now, some couple of people come and they call the breaking of this eye break of structure. That's this structure, the reversal. We've broken the eye, break of structure, and a continuation, a reversal back, another break of structure. Those are terminologies, right? Those are terminologies. But one thing that was common to every terminology is that what there's a trend. there's a trend. So your ability to capture the trend, either an uptrend, a downtrend, or a sideways trend, is what matters. There's a trend. There's a trend. There's a trend in the market, right? Good. Now, you are looking for balance, you are looking for imbalance, you are looking to be able to identify the market trend, and that's forex. That's forex. That's stock trading, that's crypto trading, that's commodity trading, that's yeah, commodity like gold, silver, US oil, copper, and lots more. That's everything. Your ability to what? Look into the price and see where we are at, where we are possibly going to, and where we would arrive at. Just what by understanding balancing out, like how price is balancing out, how price is being imbalanced, and all of those things, right? That's it. But that's still in simple what? In simple term. That's still in what? In simple term. That's still in simple term. Now, the next thing I want to talk about is after we have averages, what averages actually signify is what? Strength. What it signifies is what? Is strength. Now, if you have a market that keeps forming averaging in one direction, keep forming averaging in one direction, right? It means that what? The market is what? The trend is very, very strengthened, right? The strength is what? Very, very strengthened. A reversal of price would actually have to combat with those averages. It would have to balance out the imbalance. It would have to what? Balance out the imbalance. And for it to balance out the imbalance, it needs to take what? At least 50% of the FVG out. That's it. So if you're able to take the 50% out of the way, then you formed what? And you formed like a potential to balance, right? You formed a potential to balance. That's it. If you're able to take out the 50%, that means there's a potential to take out the remaining little percentage in one direction or the other, right? And that requires what? To overcome the preceding strength of the market, to overcome the preceding strength of the market, right? Now, all of these things that I've said now, I'm going to just give you like a display of it in one. Let's use GBPUSD. I have not using the chart that I've analyzed before now, so I just want to use a neutral chart. And let's go to daily. Now, one other thing I want to say about time frame. One other thing I want to say about time frame that that I'm saying this time around is, let me see whether I can say that about time frame now, or I should wait. Now, the thing is, time frame. Are there golden rules of time frame? Like trade this time frame, trade that time frame, or whatnot? No, there are no golden rules for time frame, in my own honest opinion. Because at the end of the day, at the end of the day, the time you have at hand will determine the time frame you trade at, right? And then the time you have at hand will determine your evolution as a trader. Because by the time you keep evolving, maybe you are someone that have just 9 a.m. to 2 p.m. of your day to stay with the chart. You cannot obviously trade the daily time frame, or you cannot obviously trade. No, you can still trade the daily time frame because you are just going to wait till the next day and come and see what has happened, confirm your trade. But you cannot trade like 4 hours interval, because from your 9 a.m. to your 1 a.m., how many 4 hours intervals do we have there? Just less than two. Basically, we have less than two. So you need to go below time frame, right? You need to go below time frame to be able to trade. So you might be doing the 1 hour time frame, or you might be doing the minute time frame, depending on whether you are someone that wants to always execute a trade, right? So your personality, what you've come to understand, should is going to adjust the time frame you get to believe in. But one thing that I'm coming to understand is the market value, the peak value, or the move potential of a pair should guide your time frame selection in terms of execution, risk management, risk aversion, and profit taking. The pips value, or the pips potential of a pair per candle per time should guide your time frame selection, right? Say for example, gold moves a lot. In a little pips, it has very wonderful values, like it has high value to both sides of either profit or what, or loss. It has a high value to both sides of either a profit or a loss. Do you get me? So in my own opinion, in my own personal opinion, I would say that if you are trading gold, you can you can I personally, when I am not a viewer, personally when I'm trading gold from the perspective of a 1 hour time frame, 1 hour time frame. I'm just, yeah, because for me, from a 1 hour time frame, I can wait and see what is happening. I can execute what is happening. I can wait for confirmation. I can wait for formation of FVGs, and I'm confident. I'm managing my risks. My risks from a 1 hour perspective is very, very minimal that I'm comfortable with, right? It's very minimal that I'm comfortable with. That's it. Now, if I'm trading a US dollar pair, say for example USD card, GBP USD. Now, if I'm trading USD card, Euro USD, yes, Euro USD is a good one. Euro USD and GBP USD card, right? You see these two pairs, in my own opinion, their movement per day is just roughly about, say, on some days, it's just roughly about 50, 40 pips or thereabouts, right? And FVG forming in between 50, 40 pips is going to give me a range of about 30 pips or something of some sort like that. So I can easily, I'm just coming to this understanding now, right? I'm just coming to this understanding. I'm like, why not? So I can easily trade from a daily perspective confirmation. I can easily trade from a daily perspective confirmation, and the structure is easy to see. Like, there's no, I'm not trying to trade every now and then in that manner, right? I'm looking at multiple pairs already. So the time frame also should be a factor in deciding my trade. Now, GBP USD, for example, GBP USD has more potential than gold, than Euro USD, as you would agree with me. JPY pairs also. So I'm looking from a 4 hour perspective for GBP USD. So from a GBP USD from a 4 hours perspective can give me a good trade opportunity. From a 4 hour perspective, I don't go below 4 hours. I've not been going below 4 hours for GBP USD from the last 2 months. Yeah, from the last 2 months or so. And gold, I've not been going below 1 hour. I've not even gone above 1 hour for gold because structurally I like the way 1 hour is moving, trend breaking and every other thing. Defining my structures and every other thing from a 1 hour perspective has been very, very good for me. Has been very, very good for me. Capturing my eyes and every other thing has been very, very good for me from the 1 hour perspective. And that's just one thing I want you to put in perspective. So the pips value, um, the pips value per time, per per amount or whatever, like I've said in time past, should be a factor in you deciding your time frame. You don't have any reason to be trading a 1 minute time frame on something that in 1 minute is only moving about 0.1 pips. You don't have any reason to be there at all, right? You can upscale. Like your risk should still be minimal when you go to daily time frame, but not weekly time frame. Obviously, I've not seen any weekly time frame. And one other thing is there are some pairs that they give you like a daily opportunity. They give you daily side, like I noticed something with the US oil. I've not been trading it, but strategy wise, I've seen some good decision making zones within the daily, and they would have been profitable, right? They would have been profitable, but like they say, it's easier said than done. So as you practice, you would actually get aligned to different time frames. So there's no like golden rule. That's one other thing I want to point out as per time frame. Now, yeah, I've been speaking for a while now, so let's um let's play around a bit. Let's play around a bit. I'm not going to use what has happened immediately to do anything. I'm just going to use what has happened before now, basically what has happened before now, and then yeah. So one other thing also that I want to mention is in terms of, okay, you understand average, you understand balancing and every other thing. Then in terms of um execution, right? You have different tools for execution, you have different indicators for execution, you have different, like we have moving averages. Some people use moving averages for their execution, trend line, break of structure and retest and every other thing, trend line and every other thing, right? And some people use the Fibonacci ratios, the 0.618, the 0.386, and so on, 0.5. Personally, I make use of the Fibonacci also for my trend continuation and reversal and every other thing, right? So for me, Fibonacci ratio for me, I make use of solely the 0.71 actually. That's the Fib ratio that I make use of. I've seen it over time and it has worked perfectly for me. Like when I say perfectly, it does not mean that there's no losses within it, but it means that I feel more convenient with it, right? I've traded in it in some time past. I've been someone that has projected fib to fib, fib to fib. Like literally I go on a monthly time frame. I was thinking in a way that structurally, okay, let's capture a monthly swing, capture the Fibonacci of the monthly swing, project it into the other time frame, and be capturing what the sub fib zone, and then I now go to lower time frame. I'm looking at structures within those lower time frame. Oh, this is 3.86, looking at break formation of support, resistance, and all of those things. I've done it, right? It was a wonderful thing. I did it in 2024 basically, and I made profit. I made my first profit withdrawal with it, and my second profit withdrawal with it. And since then, I've not made withdrawal for profit. I've traded profit this year. I lost two profit this year, 5K, very small, but it's okay. I've lost two profit this year. I think last year I did lose a profit last year, yeah. But I'm not someone that trade profit too often. I like to like trade my cash and try to just trade my cash and get some cool cash. Like I don't have a stream of cash like that. So the little I have is what I just try to make use of, right? While still learning. And I know while still learning. So let's go. Let's go. Now, I said GBPUSD. So let's look at GBPUSD structurally. Um let's find when the market was actually trending. Mm, okay, okay, okay. Let's use this downtrending scenario. Sorry. So let's use this downtrending scenario for an illustration. All right. Um, let's say, okay, I don't want to be too I don't want to be too all right. So I'm seeing like a typical downtrend of the market from here. Yeah. So like I said, you just want to come and be able to get the market structure right. So uh, we'll go down to the 4 hours now, because if you are drawing your support and resistance on one time frame, and then you're saying it's broken on that time frame. Now, if you're using support on one particular time frame, once it's broken on that time frame, it's not yet broken, right? So if I'm using my trade structure from 4 hours, my trade execution and everything from 4 hours, I'm always looking at my structure and every other thing from 4 hours. So if I go to 4 hours, okay, I didn't. So hopefully we're able to get yeah, yeah. I'm using free trading view, of course. So we have limit to what we can do. We have limit to what can I can. There's a limit to what I can teach, but it's still okay. 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 All right. So I'm going to use this uptrending market from January up to this point, right? From January up to this point in time. So I'm going to see whether we could have executed a trade or two from that point in time. So before, what we could see is we had like a downtrending market before then, and then from a 4 hour perspective, basically this is what I do from a 4 hour perspective. I had my low here, we had this high right here, right? So we came all the way from, let me see, down here, we had a low here, we had this high, we broke it, we have this low, right? And then I'm sure you might feel like, okay, why not choose this low? Basically, if you are choosing this low, would have called this our high, right? And then still would have called this our low. That's still structurally correct. That's still structurally correct, very, very correct. So these are high here, you would have called this our low, but yeah, that's structurally correct. So basically what I'm just looking at is this is the last high here, and then this is the low here, and then we have FVG right here. We have yeah, we have FVG right here. So if you're expecting a sell continuation, basically, I just want to come pick my Fibonacci and capture this. Yep, right there. That's it. If I'm looking for my sell continuation, that's what I just want to come and do, right? So let me capture it. So the closing of that candle is 25629, and that's correctly captured. The closing of this low is 2106, and this opened at 2106. So that's needs to be adjusted. All right. Oh, sorry. Closing 21. Oh, 2106, not 006. All right. So that's done. So for a sell continuation, basically, I expect the market to come this way, come here, and continue lower, right? So the question is, how will I confirm? It does not just come here and then I start selling, obviously, right? It doesn't just come here and I start selling, obviously. That's not how it's done, obviously. So how do I confirm where to sell from structurally? I look at this particular price here. We have this imbalance point here, or average as you call it, but what I will call it basically is just sell dominance, right? So the sellers were dominance from year to year. They were actually dominance in all of this candle, right? But relative to these two immediate candles, we have this low of the former candle, of this former candle right here, and then we have this high right here, meaning that this particular range from this high, from this low to this high, was what was where the dominance existed, and 50% of that downward, the sellers held it, or 50% upward, the buyers can. If we're able to have a body close above that, the buyers are in control. Until we come into 50% of that structurally, the sellers don't have it yet, right? So that brings me to, okay, structurally, I want to come here and I want to capture my FVG, right? Okay, I want to come here and I want to capture my FVG, basically. I want to come here and I want to capture my FVG, and yep. So let me capture it correctly. The low of this point is 24399, 24399. I wish I could be faster than that. Now I want to make this video short. I don't know if I'm posting it. Yeah, 23681. So I'm just showing you something right here. All right, so that's it. So yeah, we come to the point here one. But if you don't have a body close, from a 4 hour perspective, yeah, forming a new AVG or of some sort, I'm not selling. I'm not selling basically. So we came here. All right, what do we see when we came here? We came here and we formed this, we tapped into this, we were unable to close above it, right? But since we're unable to close above it, what do we have here? We basically just come down, try to go into this one, but we were unable to go into it. The midpoint was defended, right? And then we saw this third candle that just showed us buy side dominance, basically. So for me, I'm already skeptical. I'm no more selling from here, basically. I'm no more selling from here. This there's no confirmation, so no sell, no sell, and I'm not buying yet until we break this high. I'm not buying yet until we break this high. Basically, I'm not buying yet. I'm not buying yet. So um eventually we saw some movement here, some price doing its back and forth right here and whatnot, right? But there's no trade for me here. Structurally, once we break above this high, I would expect the market to come back into and use this point sell one as its base and start giving us FVG from which I can look to buy or sell, basically. Yeah, depending on the trend, but now it's a downtrend. So from here, I was looking to sell here, but I couldn't sell because it didn't give me my confirmation, right? So there's no selling, and now we have this point here. So let's use this point for educational purpose. For educational purpose. So from here, we lost control. We lost control right here. We lost control right here, and then the next day or the next week, sorry, that was 2025 January, Friday 31st, and going into the next month, Monday, Sunday, basically by 10 p.m. market opens Nigerian time. So we formed the gap right here. Now I call gap neutral point, basically. I call gap neutral point. Don't don't say why is it neutral or whatnot. I just call gap neutral point, right? So for me, when I say neutral point, it means that neither side of them owns it yet, but both are fighting for half of it. So the low of this red candle, I don't know. Let me change this to a hand indicator. Can I? A arrow. Is a arrow good? Okay, I think a arrow is okay. So I mean this one. Okay, then it changes to hand. If I'm holding a candle, that's cool. So the low of this red candle, let me zoom this so for view purpose, the low of this red candle, that's um the um the low of the neutral point and the high of the neutral point, basically. That's going to be okay. Okay, that's cool. That's going to be 23854, 23854. All right, and then when the market opened, this was the opening price to the opening price of the new week. That's our gap to the opening price. So the opening price is this low, the low 1.22856. So Yeah. So now look at the way I'm thinking of this now. Good. So I've captured this low and I've captured this low. So the question is, who's in control of this market from last week? We don't know. We don't know yet. And then we gap lower here, right? And what do we say? We had what? An up run. We had an up run. Market went high, and from here basically, I don't know. I don't want to say anything too sporadic. I don't want to be too forward or whatever. From here, basically, this is the point where both buyers and sellers are actually defending. The buyers are defending the top of this, the sellers are defending the top of this. So when we're below this, the sellers were trying as much as possible to ensure we don't go above this and close a body into it. We can wick into it and come out of it, but closing a body is going to be too drastic. Actually, it's going to be, it's not expected. Yeah, it's not that it's not expected. It could happen, but it's not going to be good for the sellers. But then what do we have? The buyers came, they showed control at the early hours of the day, and then we're into it, right? And then the next thing we saw is the sellers tried to what, push the market downward. And what do you see? Basically, they just wick it a bit, the 50%. And then what did the sellers do? Sorry, what did the buyers do? The buyers came and they balanced them out, forming this lower wick. Forming this lower wick. Let me tell you something. After this lower wick was formed, the buyers are showing that, boy, we are the one here. We are the one here. We are the one here. We shouldn't see a body close even below this lower wick. But basically, I'm mostly concerned about this. So I'm just showing you something here that when we came back here, the body was unable to close below this, right? We weak into it, but the body was unable to close below it. But that's still, by the way, that's BS. Yeah. I don't know the meaning of BS basically. I think I should check online. Nah, I don't need to check. I don't know. Is it buy stand? I don't care about that basically. So yeah. So we had this, but we didn't have we have this. We came up here. Basically, we are trying to break this eye because the sellers basically don't have it no more. The sellers are only going to have it when we come and close below here by a body. But right now, the buyers are obviously saying that they are the one in control and we are not letting go anytime soon, basically. So we came here, we formed averages, by the way. We formed average, we balanced out and all of those things. But this is the decision point. This is the point of decision and whether we can break this eye, right? So what do we do? After we come down here, right? So when we're coming down here, now let me tell you something that I think you need to understand about trading. When we're coming down here, we saw some sell strength, meaning we formed FVG, right? I'm not going to say much about this particular FVG. We formed some FVG, right? Right? Yeah, we formed some FVG. The FVG was trying to hold. Even when we came back here, you saw it try to hold before we now continue upward, right? So I'm not going to come here and tell you that you were to buy from me or whatsoever. I don't care. I wasn't trading then. I wasn't trading this way then. You understand? I wasn't trading this particular way, 2025. 2025, I was using Fibonacci and yeah, I was using Fibonacci. I think I was still projecting. Yeah, 2025, I was projecting like boom, projecting fib into fibs and every other thing. But now I'm just keeping things just structurally, right? So yeah, so that's by the way. Like I said, I was going to be buying. So say we have this, and then we come back to this point 71, and then we start going. But that's by the way. That's by the way. So we didn't see that. Rather, we formed the eye, right? We formed this eye. So upon forming this particular eye from 4 hours perspective, and I call something a eye not by its wick, but by the closing of the candle, right? Or a low by the closing of the candle. So that's what I call eye, and I'm sorry about that if that's not what you call your eye. So that's by the way. So for me, we closed here. We had the eye formed here. We came down, but we were unable to what come into this down structure that we broke, right? Break or structure. Mhm. So we were unable to see that, and we started forming what averages. We formed this lower average here, and we came to this point right here. We tried to come down, well, we were unable to come down, right? So this where you might want to conflict with me. So in my own opinion, we formed a low here because we broke the earlier high. But this one, I can't characterize any of this as my eye because I've not seen any substantial move downward to my 0.71. So basically, initially, I might have captured any of this eye as my eye and have my fib in place waiting for the 0.71 retracement, but we didn't get that. So that makes me change my mind. Sorry, that makes me change my mind and bring my eye to this point. Good. Now I bring my eye to this point and say, okay, this is the closing. We have seen a lot of move and still I'm doing nothing, and we're already in April. Basically, if you're trying to trade this point, you would have been frustrated. Anybody could have been frustrated from here. Anybody could have been frustrated right here. A lot of people I'm sure were frustrated in this particular point. But just looking at structure. So when you're trying to trade this point, you could have been trading other things, right? You could have been trading gold. I don't know. Any other thing. So the closing point, which one is higher? Let me see. Um, this close is, I'm looking at it right here. This close is 31618. This open is 31618. Okay, 31618 then is the high. I'm just going to do some illustration. I don't know, maybe I'm going to talk about my trading situation right now. Although I might not be completely sincere about it, but I'm still going to talk about it. So yeah, that's by the way. So for me, this was the high we formed, and then this was the low. That was my immediate low, basically. Just structure base. Oh god. Sorry guys, I have to scroll down. Oh my goodness. Okay. So this was the low right here. All right. I'm going to do something. I don't know. It might close 1.25755. All right. Okay. So what do we have here? We have the up bust. Here we have some structure here. So when you see someone say, "Oh, uptrend market like this, like this, like this," does not necessarily mean it's going to be perfect, right? I think so. So let's do this and yeah. So that's our 0.71. Cool. So let's go this way and align everything. 755 Control C, 755, and then this one is close 168, open 618. Sorry, 618. All right. So in my opinion, for the continuation of the uptrend, like I said, you wait for I would basically wait for reversal back into the 0.71. Yep, reversal back into the 0.71. And I'll be very, very honest with you, like totally honest with you. Reversal back into the 0.71, just showing you um like like everything I've explained to you thus far, how it should have played out in my own personal opinion, very, very personal. From 4 hours, capturing my structure and everything from 4 hours, everything from 4 hours. And yeah, I normally just embrace the 0.81. I'm not trading from 0.81, obviously, but it's just for me to not have just a single line around. Yeah, just have not a single. So I'm like the 0.81, 0.71, 0.81 is just a way to balance things out. So it's like, oh, this is the zone. Yeah, I'm not someone that is. Okay, don't let me say anything. I don't want to be speaking some ways right now. So basically, we came to the 0.71, right? And what do we see? Structurally, we saw the sell dominance from here. We have the sell average right here. We have another average here, right? But before this average formed, before this candle formed, right? I can use the pre-play of the price of the point of market price for you. But before this chart, all of this formed, right? So one thing I do is look at the candle and look at the present dominance definition, right? So for me, this would have been the present dominance definition right here. But then it was refined when this formed, it was refined to something like this, right? Good. Now, this was refined to this, but that's by the way. So I'm going to show you how this would have played out. I think I'll go back to this. I'm not used to that arrow. Sorry. I just like knowing I'm on something. Like that way I know I'm on the candle itself. So this is the low 28366. 28 uh 28 oh 027, sorry. Okay, that's the low right there, and then this is the high, 2778. All right, so you see, I've captured my average right there. So this little area is where the sellers are trying to protect, or the buyers are trying to what, take out of the way. That's the first FVG coming down here to this, right? And then we have the second one right here, and we have the second one right here. I'm just trying to show you something like I might have played it differently, but obviously it's played out already. So just for us to learn from it. 646. 646. Just like, oh, how would you confirm your trade? That's what this is, because is like that's the intention of this explanation right here. So we got the 0.71, right? We got the 0.71 reversal. Obviously, we are not seeing an AVG here that would have helped us to control our stop loss. Yeah, we're not seeing an AVG here that would have helped us to control our stop loss. So how would I have played it intentionally? How would I have played it? First off, I would have noticed, okay, this particular big boy here. Firstly, let me tell you how I've played it. Firstly, I'll come here and I'll capture this right here. Right me. I'll capture this right here, the remaining area here, and I'll wait and see what the next candle does. So this next candle is going to tell me, okay, are we the midpoint of this, like this cell, like this cell balance, like from, let me zoom this in for you to understand what I'm saying. So don't forget, I'm using 4 hours. So my confirmation and everything, 4 hours. So basically, I'm just trying to come here and capture the low of this former candle, more or less like an FVG, but this time not like a fully formed FVG, just sell dominance, just capturing sell dominance. So the low here, 28027. So like 28027, and then the closing of that candle itself. Like this one's haven't formed yet. It haven't formed yet. The closing of that candle, we have two. Sorry, yeah, 27296. It's actually slow. So I can't. I might most likely not be able to make like a whole lot of examples and every other thing, but let's see how it goes. Let's see how it goes. So this is the midpoint right here. So I'm going to look at it, and I expect, okay, if you're going to buy from here immediately, I expect buyers to come in and close the body above it, right? Come in and close the body above it. But obviously, we didn't do that. Yeah, we didn't do that. So what do we see is, rather, we came here, we the buyers came, right? But the sellers balanced them out. Now, when the sellers balance them out, it's defined like this, right? It's this basically like this, right? Like this. But I don't want to put too much. I don't want to push too much. I don't want to put too much detail or too much of stuff into it. I don't want to make it. Yeah, I can say it. Let me even say it. Let me say it so you know it. So when wicks are forming, is a point of balance. So taking one side of it, we tilt the balance. If you want to tilt the balance, one person must be dominant. You must have a body closing to one direction. So throughout, we didn't have like a substantial body close below this follow up week, follow up balance point. This was a balance point. So either FVG and wick, they both serve the same characteristics, right? They both serve the same characteristics, and the midpoint um is the boundary mark. The midpoint is the boundary mark, right? So, but that's by the way. So I'm saying out, I would have executed this trade. So when we saw this potential body close out here, right? Let me just tell you all of it. When we saw this, okay, we came here, um we are obviously, let me just show you, we obviously unable to balance out the new balance wheel that was being formed. Then finally we balanced it out right here. So I would have come here right here and long from here, expecting a continuation, and set my stop loss like somewhat below here. I will not tell you I'll set my stop loss right here. Nah, most likely I might even make it smaller because of the risks to reward, right? I might make it smaller, hoping that market will just continue upward like that, and I would have been stopped out on my first attempt, and that's okay because I understand. Okay, rather we are seeing some moves here. I still have another FVG here, right? Basically, this FVG here was showing like, no, no, I can never turn back. Oh. So, yeah, I'm a Christian and it's beautiful. So basically, um, This FVG here, the midpoint was strong and cool and fantastic and every other thing that you can imagine it to be. And I would have taken one trade here. Then we have this new FVG. I would have I've learned to come to notice it and take account of it immediately. Actually, take account of it immediately because you are claiming to read the price, so you should look at the market and take account of what the price is telling you. So we have this FVG here, and for multiple 4 hours intervals, 1, 2, 3, 4, 5. So that's like basically almost a day. We were unable to like close out of it, and then finally we closed out of it. And when we closed out of it, I would have placed another trade. Yeah, I would have placed another trade. That's the honest truth. And what this other trade would have looked like is something like this. Place this other trade, and okay, now maybe I might want to set the stop loss here, but honestly, it's too much. So I just think, oh, there's no way this thing is coming below this, and put my stop loss right here, like below this body, like this body is telling me, oh, this is like a buy side stop. The buyer should be able to protect the 50% of this body, and I would have seen a surprising move up, but then this FVG would tell me another story, and then this other candle formation. Let me delete this other candle formation will tell me another story, and this and this and this and this. And basically, I have the 0.01 acting as my base, but I'd have taken a trade here, basically stopped out because it was not immediate. That's it. I'd have taken a trade here again, stopped out because my stop loss will be right here. I won't do to put my stop loss here because ideally, except I'm trading on 0.02 because of the account size I'm using. And if I'm trading on 0.02, I would have been risking $16, right? But I would want to like let me be convenient, let me be honest, like I would want to like potentially hope to make like $100, like because of how much money I'm in need of. Like God, yeah, that's it. When you need money, actually, sometimes you can trade and you're waiting some unnecessary sale because if I've taken 0.02, I'd have been able to say, okay, let me risk $16 of my $100 account balance and see what would happen, right? But that's by the way. That's by the way. Now, the next thing is we have this last FVG here. Yeah, you can come. It's not even you can come. There's need for you to understand that these FVGs are points the market will need to keep overcoming. This one right here, and last and not the least, obviously, this one right here. So market will need to come, overcome it, and all of those type of things. But basically, I would have tried here, nothing to show for it. I would not tell you I came here and I bought this low immediately. No, 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 no. I have absolutely nothing. I have absolutely nothing to say about that. Now, so how would I have executed moving forward is okay. I would have most likely after the failures here, and then we start saying buy candles, right? Not dominance yet because we're having weeks and we're having weeks. Until then we close above this substantially. We're able to close above this, right? When we close above this one, nothing much actually, in all honesty, nothing much. But one thing that I see here that could have be another point is we have a market gap here. Yeah, we have a market freaking gap here. And let me show you. The market closed here on Friday and opened here on um Monday, on Sunday basically. And we have this. So if you are thinking of buying this market and obviously you failed here, you know, I showed you the opening price effect before now. And now this is immediately after the 0.71 retracement, and this one just shows me, oh, we could come into this, right? And then basically I might not have done anything if I've seen this. Just see if I had seen it. So it happens in the market. So I would have waited for the market for the buyers to show control and actually take out these points. So as soon as the market comes and takes out these points, then this would be my execution. Come, capture this, closing, good. That will be my execution. I place my buy long right about here. Stop loss 40 something pips, and target. I don't want to throw it so high. Yeah. So let's say I would have basically targeted that immediate high because um basically just like structurally target that high, and that would have been it. That would have been it. I could come here and start saying a lot of things about structure and the reason that I is okay because you have an FVG here. If you draw this FVG, that was what basically gave us this I, and then so that's just it. That would have been the cool entry for me. And from this I right here, try to calm down. We're able to calm down. And basically the question is, would you have captured this I as your I, or this I and then wait for 0.71 and every other thing? But basically, market haven't been moving perfectly. We call this one because it was a good condition for us to cash it at. So let me tell you how I've played here, right? I don't know. Depending on how I was feeling actually, I'm not trading, I'm not showing you real market action. If I wanted to show you real market action, I would go straight to gold, which I'm still going to do just briefly. Yeah, briefly. So right here, we form this high here, try coming down, expecting the market to calm down, like from this low to this high point, sell one, somewhere around here. I don't know, I don't care. So, well, we're unable to get that basically. We had this sideway market. Now, when we have this sideway market, right, we had this sideway market, and then this was the highest point of that sideway market. This, like this point here. When I mean sideway, like we are seeing reversal after the highs, we are seeing reversal after the high. So, for this overall move, so the high for this overall move would have been here. You see that should have been here. I don't see no other thing here. This is not meant to be like, this is not like trading secret 101 or whatsoever. This is just trading in hindsight. So the eye was here, and let me just change this. I think I'll spend more time on this video than I planned to. I don't know. I'm just tired already. So the eye was here, the low was here. We broke it finally. And basically my structures was not playing out for me. Like like last structure I taught you isn't playing out for me. How would I have played it? Hmm, I don't want to say much of it actually, but how would I have played it is just um trade 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 structurally, right? Trade structurally. And what do I mean by trade structurally? From here, we expected that we're expecting a reversal. That means a sell side dominance, like not dominance per se, but sell FVGs to keep forming. But we're not having them. We're not having them. Say for example, when we form this high, we form this low. When we form this high, we form this low. I expected us to come and break this particular low, right? We were unable to break it substantially until we had this FVG. Now this FVG right here just goes on to tell me, okay, just like the sell dominance area. Now, if you could come here and capture this, if you want to see a substantial reversal, if you want to see a substantial reversal of this particular market, you want to see that markets try to keep price below this midpoint, like so that we can go lower and have the 0.71 retracement as you'd have think of it, right? But we didn't get that. Rather, the market came quickly and gave us this break right here, right? Give us this break. From here, I don't know, you could have started thinking about buying the market for a continuation. But basically, for me, nobody could have. Maybe there might have been some news events, some macro events that might have given you an idea of what the market was doing already. Because yeah, you know, there are some news data, there are some things that happened last year and every other thing that influenced this market movement, right? So the move doesn't have to be perfect. The trend doesn't have to be perfect. What you need to do is just understanding that you are just checking and understanding which side of the market is in control. Like for example, this whole move, let's see, this move that I traded here is like the last leg before. Okay, was it here? Okay, yeah, right here. This last leg before we had this was sideways. Like we had this, and then you know, more or less like nothing has been happening. But some things are happening. There are trading opportunities and lots more, even within this point, right? But what you should be able to understand is understand how market prices are balancing out each other. And your confirmations also should be how market and prices are what balancing out each other. That's from a past analogy, right? So from 4 hours perspective. Now, let me show you something immediate that happened with USD card. That's my personal trading. All right. So for USD card, personally, if you check the daily, nothing much has been happening with USD card, right? Um, USD card has been a play. Look at what it did from the whole of 2022. We had this, and we just went sideways. Sell the high, buy the low. I don't know. Then this one also, it bounced out. We came down here. We had some ranging months, and then we pumped out of it again. Now, what I just looked at from this analogy is, okay, I'm not trying to say this is the trend or whatsoever, but I can just capture the actual range. So for this play, I'm looking at daily time frame. Yeah. Now, from daily time frame perspective, we had this low right here. We had this high right here, right? So basically, if you're expecting a continuation, like I've said is come like this, and basically just capture this point right here. Just capture this point right here. Await the point sell one and some side of the market to start taking control. But we didn't get that, right? But that's what you'd have expected, right? But then what you saw is we came here, the point someone was unable to hold, right? And then we broke, formed a new low right here. But there was something about this new low right here, like from the daily perspective. Once sellers try and show that if they were the one in control right here, we saw this big boy, like this candle right here, this gray candle right here just came in and just puffed things off. So it did that. This buy candle just showed dominance and every other thing. And when it did that, I just capture this whole candle that okay, this buyer saying that this whole body of the candle. I'm not saying oh this little point like I would have done ideally, but this is a daily time frame. So this whole candle is saying that we are the one in control. So this midpoint is defended. That's what I was able to interpret this as. Right, you can see it here already. This whole point is defended, and then don't forget we broke the low. So structurally, if we take our candle, our fib, and we do this as yeah. So this was our 0.71, and then if you're going to sell, you should see 0.71 being taken out and every other thing of some sort. So um this one was just like trading structures and every other thing and whatnot, just understanding how the range works, testing of wicks and every other thing and whatnot. But this is not the main thing. The main thing is okay, market came here, we priced into this, we balanced it out, formed this low here. We expect nobody, like nobody, no candle body to go and close above the 50% of that substantially. So let's see the high. If you are going to continue lower, basically that's what I mean. Let's see the high. Okay. Figure 967. I'm already thirsty. Very tired already. That's why I don't make video because I don't have much energy. 39234. I don't have much energy. So if I make one video, I just and it's already having like a lot of values in it already. In all honesty, a lot of values in it. So I know this year we formed when we first of all come into the 0.71 year and like just because of the fact that we formed a new low year, so I was expecting that okay, it should continue lower. That's just it. I didn't trade this. I just what did I even have a trading capital at this point? Or no. I was not even looking at it from daily perspective at this point. From as of April, I was looking at this price and I was like, this thing is freaking annoying. Like, what's this boy doing? Like, what's he doing? Like, what the hell? So that's my thought from last April, like April, not last April, like this April. I'm like, this market is not moving at all. I was not even looking at USD card at all, right? But understanding growth and every other thing and how it works. Yeah. So from that discovery that like let me okay, I think I can share it from me. I have to go back to that chart of what I wrote down. I think I could have pinned it actually. I could have pinned it to the chart, and as I move between charts, it should be showing. I don't think I can do that, sir. So how would I have executed this trade from what I've learned thus far? like I would have said is, oh, we had these FVGs and every other thing and whatnot. But firstly, we had this balancing out of a thing. So upon this formation, this first one, good, but not strong enough. This second one, sell from here, stop loss right here. That's like 50 pips of a stop loss. And target, no the drill. This one would have been like, bap, this right here, right? That was the target actually. That would have been the target, about a 1 to 8. Yeah, a 1 to 8 trade. That would have been the target. But we didn't get the 1 to 8 obviously, because as you'd have imagined, I would have stopped out of the trade. Like I just not stop loss and every other thing. Because we saw this body right here that formed right here. Sellers were dominant, but then they couldn't hold this. We balanced them out here and they couldn't hold this, and then the seller buyers came back in and they came back in. So what I was looking at, with the what I was looking at with the price was, okay, they came back at it and they came back to the 0.71. Upon coming back to the 0.71, like they were unable to hold it and continue downward basically. Now they formed a new high. So structurally, like based on the structure I was defining, which might obviously not be the best structure. Like I said, I would expect a reversal back to this 0.71 and then a continuation upward, for me to see a continuation, and then from there reversal back into the usual zone, usual trend 0.71 and whatnot. So we didn't get that. We didn't get that. And then we're getting some news that like the US dollar basically was showing some weakness, has been showing some weakness. Yeah, it has been showing some weakness fundamentally. Fundamentally, it has been showing some weakness. So we came to this 0.71. We have this balance point right here, which you can see. We're trying to hold it, but then we just came and we saw this body, pow. And upon seeing this body right here, like I would have said is, I would have captured this like this and said that I don't expect market to come and close a body above the midpoint of this. Let me delete this, don't worry. Above the midpoint of this at all, right? And then we have this FVG right here also that held the market secretly. It held the market secretly. Yeah. So initially, let me tell you what I did. Let me tell you why I say that trading is is actually is a lot. I traded it, I took the trade, set my stop loss right there. I was expecting about $10 actually. Yeah, about $10. And then market went in my direction the following day. And then all of a sudden I started seeing it going this way. And then I just told myself, okay, you know what? If this fib, if this FVG, if this FVG is holding, then we might actually want to come back into this midpoint and before we go down. You understand? So I told myself, okay, let me just close it. So I closed it for about 0 point something dollar, like some cents actually, and say that okay, I'm going to wait for the market to come here and look at what the market does from here. So basically, that would have revised my FVG, revised my like my balance point to an FVG, and then this like here, right here would have been my entry point, and shorting from here, from a daily perspective, you can see. So stop loss right here, 32, 32 pips. That's it. TP right here, like a 1 to 5.81. Okay, and now we saw it, we got it. I didn't take the trade. Yeah, I was in one trade here. I was like, okay, let me just take it out and wait for this to happen. But I was too I was too into gold, and I didn't do it. That's daily. So that's what I mean by can look at different time frames and still trade, and your risk should still be well managed. So I'm not saying that USD card is going to be bullish from here. Obviously not, but structurally, I just expect that okay from here and see what would happen. Yeah, and see what would happen. Don't forget the buyers are actually holding this low. So structurally, something might happen here. Yeah, that's the 0.71 of this overall whatever. That's from daily. So that's why this would have been my TP, and that would have been 190 pips, $32 rigs, 0.1 for I think close to $190. I don't know, and that would have been great. Yeah, would have been great. So that's like me showing you what I showed you, like what I showed you happened in the past, like trading it in real time and whatnot. So that's just it. And then we have this beautiful boy Yeah, gold. Very annoying. Like very annoying. Very annoying. Very annoying. I'm actually waiting for a reversal on gold. Let me just delete this. That's not how the market works. So I've captured this side already on gold, and I'm waiting for a reversal back. I was looking at gold here, and I was just looking at gold. So I'm waiting for a reversal of gold right now, back to this 0.71, right? So this is my low here. So I was expecting, like I was saying, this gold is frustrating. But it's okay. It's okay. Actually, market is just cool. It's cool. So let me tell you what's happening right now. Structurally, from a structural definition of things, we have an FVG that yeah. So we have this FVG right here from the sell side of things. This FVG right here. So I just stretch it out, and then we have this market opening gap. Did I capture this opening gap well? I think I didn't. Oh, I didn't. I didn't. So there's an error here. Let me just do it correctly. This is the low, the close 454053. I don't. Okay, so I'm going to say some things, and the opening 4520795. Yeah, so that's it. That's me just dragging my opening gap of markets. Yeah, so that's it. So that would have been my midpoint and everything, whatnot. So um, this market pushed higher, right? So we had this incredible push up of the market. I've captured this FVG. I've not obviously captured this FVG, right? I'm not looking to trade the reversal actually. No, no, no. Obviously not. I don't have much capital like that to be playing around on reversals. I'm not looking to trade the reversals. Yeah. So we've seen this now. This point is where like what I'm telling you is like learning to read the price. So this week, this WICK, this week right here is like, oh, the sellers were trying to this was an FVG obviously. So they were trying to hold the upper point. They gave us this balance point below. Then we had this FVG right here. The sellers came, they took it out. After taking it out, I'm sure the midpoint is holding. Yeah, it's holding. So we had this, we had the midpoint of this holding. Then we bounced off it, right? Upon bouncing off it, we're able to close below this one substantially. Now we are forming a new balance point here. I don't want to be captured. I might necessarily like because I'm not sitting in front of the charts every now and then, so I'm not trying to like capture. I just want to wait for the market to give me the reversal into my point one, right? Obviously, I could have want to trade it, but you know it's good. So I might be trying to trade the reversal, and then before I just know it, I think one of my earpod just went off, so it might affect the audio. So let me confirm it. It might affect the audio. Okay. So um so that's basically it. So what I just showed you is how I'm trading. Yeah, is how I'm trading right now. Is how I think I'll be trading. I don't know. I can evolve. I don't think I'm evolving from this. Yeah, like it's also straight. Like I'm not trying to trade as soon as I get here. I have my confirmations. I have every other thing. Wait for one side, balance out, and whatnot to form. Yeah. So on that note, let me go back to where I started from. Um, um, I'm going to try and I'm going to post this video actually. I'll put effort in recording it, and I think I'm still going to talk more in the future. I'm still going to talk more in the future, right? Right. So, oh, this is my actual chart. GBP USD 4 hours perspective. Yeah, yeah. I'm waiting for this market to give me actual high. I'm waiting for it to give me an actual high. Yeah, it hasn't done that yet. I'm waiting for it to give me an actual high. So I don't know where that is going to be. So once it gives me an actual high, I'm going to obviously and come in and okay, just do your thing and it's going to be straight, right? Incredibly straight, incredibly straight. So uh, so that's by the way. Let me say some closing remarks. All right. So basically what I just want you to know is trading is not it's not like it's not hard, right? It's not easy. Nothing about making money is easy, right? It requires effort, it requires learning, and it requires grace. Yeah, it requires grace also. So it requires the God factor in it. That's the most important. That's the most important because me coming to this understanding and every other thing is as a result of God guiding my step and guiding my path, per time, per season, right? Making me to learn as I go, learn, uh, yeah, learning as I go, right? That's it, and that's the honest review of the journey thus far. I don't have $1,000 account. I don't have a $500 account. I don't necessarily have even like any substantial accounts right now that I'm trading on because even what I'm trading now is not even like it's not an account per se. No way. I don't want to spill the tea as far. It's not a nice tea. You don't want. So um so yeah, trading is a good journey. You can come into it today and even before you know you can even be better than me. You can even go ahead and like make money and be richer, like even like rich, not even richer, be rich, right? And and you just be like, oh, like this boy has been here for this while and he's not making money. But yeah, it varies per people and by exposure to finances and every other thing. So I'm just going to keep doing the little I can and see how I can evolve over time. You see, talking for me is stressful. Yeah, I love to talk, but sometimes it can be stressful. It's not as if I have a note written down. I'm just trying to do all of this on my brain and all the other things. So yeah, so that's by the way. I didn't show my face this time around, and yeah, there's no reason for that. I was thinking of suiting up, but there's heat and there's no fan, there's no light right now. Just my laptop is well charged and yeah, it's actually good. So if you have learned something from this video, don't look at it that you didn't hear my voice. Like, comment. If there's something that stood out to you, if there's something that you think, oh, you look at it and try it out, put it in the comment section. Subscribe to the channel and yeah, subscribe to the channel. If you'd like to connect with me, you can put it in the comments and obviously I would try and see how that will work out. But like I said, this is not actually like any sort of financial advice. It's just like meant to just like it's not any sort of financial advice. The trade opportunity I showed was is not any sort of financial advice whatsoever. So yeah, trading, just buying and selling, balance out, averages and every other thing. So there are a lot of terminologies actually by the way. So thank you for staying to this moment. I'm really appreciative of it. God bless you and stay blessed.